Good morning, good morning. Welcome back to my channel. Yes, it is me, Kadero Hudson, the wingman. We are here to get this money. We're here to talk about investing, how to make passive income. Yeah, let's do it. Ooh, let's do it. So we are here uh embarking to the road to 100K. The road to 100K, guys. And so I have two goals. Well, I have multiple goals, but uh I am definitely a part of this dividend growth investing community, even though a lot of people don't give me my credit. But holla at your boy is me, the Millionaire Investor 1914. One of my goals is for all of my portfolios investing as a have a net worth of 100K. As you see right here, I am $6 away from 85,000, and it's only February. Imagine only would need another 15,000, and I can do that because I'm planning on investing $1,000 into my taxable account, and every month for moving forward. At least I know next month I'm dropping a bag. I'm dropping 1,500 next month, and then in August I'm dropping another 1,500, and then the rest of the month I'm dropping at least 1,000 ish, 1,100. Yeah. But the goal is for my overall portfolio to reach to 100K, and then for my taxable account to have it to reach 100K, and then from there on, focus more so on my Roth IRA and getting that up a little bit. I know I still have the 59 and a half, but it's at roughly 8,000 right now. Let's look at it. My Roth IRA is at roughly 8,600 right now. I plan on contributing $500 into it next week, so it should push this up to 9,000. And as you see right here, my taxable account is at $53,815. Definitely man, I've been putting in that work already, and I've shifted my portfolio to a lot into growth. Been buying. Well, let's look into it. Let's look into it. Let's look at the positions. We just gonna dive right in into my Fidelity, and then we're diving into my Simply Safe dividends, so you guys can get a better understanding. But here's the taxable account right here, and then in the taxable account, as we get to the road to 100K, this is the one, the 53,800 and ish, and some of the newcomers in the portfolio got to go down because they're under 1,000. I recently just I started positioning Williams Sonoma. You see, I'm already up 8%. Bought Williams Sonoma. If I don't think I can see it because the whole. Anyway, I can't really see it. Williams Sonoma is at $202 because I'm blocking it, and it's at 219. Yikes, 220. Yikes. I've been buying Costco. Costco is raging up. I'm going to continue to be buying Cullen Frost. That's more of an income play. I just recently just bought American Express and started a new position here, and already up. I'm already up 1%, and I really don't want to. I actually wanted to buy American Express under this. I wanted to buy to the $200 range, 205 range, but it's been on a tear, and I guess I should have bought that this the 180. I have $180 in my queue to spend. I should have actually bought it when it had went down to $210. But I was being greedy, and I was trying to get it back at like 208.50, and it shot right past 210, and now it's at 212. So I have to wait. I actually got right back in position with the Mo. I know I'm down. I'm going to be down for a long time, but that's more so an income play for all of the low yielders I have in my portfolio. I started a position here with uh, waste management and also realty income. But in my last video, we already know about how much I made last month in January, yada yada yada. I don't normally speak about my other portfolios, but here we go. Here's right here is my Roth IRA. my Roth IRA, I know it's compared to my tax account in terms of muscles, it's severely lacking. This account is severely lacking muscles, but we're gonna get to it. I'm gonna deposit $500 next month, and I'm going to put some money into Accenture, AMD, QQQM into it, and realty income, and I might start a position in Meta. I know. They just they just start paying the dividend. So, I mean, yeah. So why not? So I might as well. I'm not gonna put it in my taxable account. My taxable account is only for the ballers, the Broadcom, the Apples, and the Microsoft of the world. But hey, with my Roth IRA, I have at least 25 years to let it grow, right? And so here, as you see, right, I have Lam Research, I have Accenture, I have AMD, QQQM, I have a lot of tech companies. So might as well start a position and with Meta, right? Yeah, I'm thinking so. Start a position with Meta, just like I started this position with Google in this dollar cost average on a monthly basis. Yeah, we're gonna do that, and then we're gonna win, and we'll collect those dividends. We'll collect that growth, and it is what it is, right? And then here is my rollover IRA, and so this is where uh, we have that when I leave companies and I take the 401k, I just I just dump it into this one right here, and when you dump it, you just dump it into whatever stocks you want to continue to dump it, right? And I'm also thinking about when down the line when I leave my company and my 401k grows to a juicy, I'm hoping it grows to a juicy 15, 20, 30, $40,000 amount, right? So I can roll it over. And then right here, probably put some in Costco. See, my Costco is really booming. My Nvidia. So Costco is booming. Nvidia is booming. My KLAC is booming. Centos is crushing it. Look, up 44%. My applied materials is steadily rolling. I got Moody's. Ooh, I got that Moody's. I got Moody's booming. I just recently added Eli Lilly. You see this bad boy? I bought it at 574. It's at 740. Ooh, and then gonna continue to build up this monolithic power. That's Amazon. Hey, Amazon starting to be profitable. Ooh. So guess what? When I get some extra money, I'm gonna open a position Meta. Why not add Meta here? Add Parker Hannifin. So I'm thinking about adding Parker Hannifin, a dividend growth play, and a growth company play, right? Win-win. Also add Meta, and then from there on, I think that's the last, and then maybe a United Healthcare. I don't know, uh, or maybe another tech play, like a high growth tech play, like a CDW or whatnot, or AMD. At AMD here, so that I could both have Nvidia and AMD and this boy rocking and rolling, or maybe just add another a dividend growth stock uh, that's high growth, but yet at the same time more stability. Because as you see right here, I have the Costco is high growth, but it's stable. KLC, okay, Centos definitely, but when you think of like Amazon, Monolithic Power, Applied Materials, KLAC, and Nvidia. These are high growth. These are high, the when it's times is good, it's good. When times are bad, it's bad. Definitely something that's like high growth, pays a juicy dividend, but that's going to also anchor my portfolio. So if you guys have any suggestions for me to think of to add, let me know. I'm thinking about adding Meta and Parker Hannifin to this portfolio because it pays dividend and the high growth. Because I recently added waste management, and I added another stock in my taxable account. So, oh yeah, I was gonna add Moody's to my taxable account, but I decided to go with Waste Management and uh, American Express. I think with the American Express play and the Waste Management play, it's gonna really help out and blow the portfolio out of the water. And so, let me know, you guys, if you think any other dividend growth companies I should add as high growth to this portfolio right here. This portfolio is at 19,334, and just like my Roth, this portfolio has roughly 15, 25 years ish to grow. 19 this 19,000 has roughly at least 10 plus years to grow. Ooh, imagine what this portfolio. I'm not gonna touch it. This Imagine what this portfolio is gonna look like in 20 years. Ooh, I'm 35 now. I'll be 55. Ooh, my goodness. Delicious. Oh, and then lastly, I'm feeling feeling good, baby. And then right here, lastly, you have my work 401k, and now my work 401k is starting to pick up now. Starting to pick up. Normally, when I start a job and when I'm contributing to the 401k, usually it's not even worth looking at or talking about when it's under 1,000. But I promise you, every time I start over with a new company to then invest in their 401k, it's definitely always starting to get interesting after 1,000. Because then after 1,000, then it hits like 1,500. That 1,500 hits 2,000. Now you see right now, I'm at $3,175. If I had one of the TLA, the lead attorney blowhorn, like, man, I wish I could just blow the little horn. Like, oh snaps! Imagine, because then eventually this is gonna be 5,000. Then it's gonna be 8,000. Then it's gonna be 10,000, and then you know by the grace of God, stay with the company for 2 years. Oh, then the company match really start to kick in, because right now with my company, you have to stay with the company for a full year, and then after that, after you stay for a full year, then you eventually the year after that you'll be able to receive the matching. So basically, all this 3,000 is everything that I put in. This is not company match. So imagine when the company match start kicking. Oh man! After my year, because my 1 year is in June. So then it won't be until so you got to be 4 year. So all in all, that next following year, that's cool. Let me continue to put money into my own retirement account. Get it up to about 8,000. Then by the time next year come to contribute, then hit that profit share. Oh my god! By that time, I have already had 10,000 in, and then guess what? Ooh, I put in another 8,000. That's 18,000. 10,000 plus 8. That's 18,000. And then they gonna match it. So go ahead, match my 8,000. Give me 8,000, and guess what? We at 26,000. Let that baby compound. Ooh, and then that's no telling how my that's no telling how my taxable dividend account is going to be, because man, I'm already at close to 54,000 right now. Right, I'm trying to hit 100K so that my portfolio can snowball. Once you hit 100K, your portfolio begin to snowball. Dividend, snowball, compound interest, crazy. You just got to get to the 100K. You just got to get it, and that's why I'm going to go to Brazil, go to Rio, go to this one big trip this year, and then after that, everything else I'm focused on renovating my house and my investing. That's it. And then I'll just probably go somewhere for my birthday, like San Diego. But once I blow this money on this Rio trip, I'm good. Everything else is portfolio, dividend growth portfolio. Get up to 65,000. Get up to 75,000. Because then guess what? Next year I'm dropping another 15 to 20,000 in this portfolio. I'm trying to get to 100K. I'm trying to get this money. I'm trying to buy Bitcoin. more Bitcoin. I'm trying to grow my wealth. Let's get it, baby. Road to 100K. I decided to show you guys my whole portfolio of all my stocks and all my investments and how's it going. And it's going good. We sticking to the game plan. We getting to the money. Let's go. See y'all in Brazil.